let's go for the recording purpose. Today, end of financial year webinar, EOFY, tax time, accounting, anything that you need in terms of legalities, because we run legit personal training businesses here. We pay our taxes. We keep the man happy, if you want to call him the man, the tax man, or woman, because we don't discriminate. And it's as simple as that. So we're going to get stuck in, guys. I just want to highlight here today, first and foremost, as always, the disclaimer. Today is not really going to be along these lines, but always discuss with me, like I say, before implementing. You work with me one-on-one. That's the main thing. But all of this stuff today is pretty much you're going to be able to take away value and then implement it, because we all have to go about our taxes. This is not financial advice, what I'm giving you here, guys. I'm not, like, even though me being the blunt person that I am, I'm it kind of is, but like, just legally, I'm not an accountant, right? However, I've been through a lot of shit, which enables me to cut that crap out for you guys and deliver you what you need to save you a lot of money. As an example, Phil Perg, so he was using an accountant for a long time. I told him, I advised him against his accountant. This accountant was doing, Michael, similarly what JG told me to do, right? Which was basically run over $250,000 business through an ABN, which is the worst advice anyone could give you. And Phil didn't really take my advice. And again, like I said, I'm not a financial advisor. I'm not a qualified accountant, but my experience qualifies me to help people out, give advice. Cut a long story short, Phil, once he then started listening to my advice, he cut his tax bill in half, 50%. So that tax bill enabled him to cover all of his coaching for the whole year. Basically, what I've saved him now is his entire coaching with me, plus more. So again, I'm not an accountant, but like, I've been through a bit, and my experience is what I'm here to share with you all. And that's pretty much that. What I want you to do, as I mentioned before, for the guys who've just jumped on board, Tane, great to have you on board here. Alex, who's just tuning in as well, great to have you on board. Alex, brother from New Zealand, hopefully you're well. Take yourself off mute at any time. All right, interrupt me and ask questions about this shit. Like, don't leave yourself with things that are so important, such as taxes. Don't leave yourself leaving this webinar having questions, right? And ideally, guys, ask everything in this webinar, because you're all in the same boat. All right, you're all in the same boat. So one of you has a question, chances are the rest of you are thinking it. All right, and it's that simple. All right, so are we good? So we get stuck in. All right, I'm taking from the bottom. All right, basic stuff, because we're going to cover every single person here, and then we're going to kind of escalate it and see where this takes us. So first and foremost, at tax time, you can either lodge taxes yourself, or you can have an accountant, right? Everyone knows that you can lodge taxes yourself and you can have an accountant. All right, that's pretty much what it comes down to. So the question here really is like, should you get an accountant? I've talked about, like, I'm not really that fond of accountants. I've been through a hell of a lot. But again, when you find the right people, you know, you can have some good accountants out there. So do you need to get one or not? Well, the answer is depends on the scale of your business. So I don't recommend that. So we're going to talk about all that stuff as well, Alex, 100%, brother. So I don't recommend that you start throwing a ton of money at accounting when you're doing less than 50K a year. There's no need. You can, in Australia, who's familiar with like a H&R Block? Anyone heard of them? Like, show of hands, anyone knows who that is? So H&R Block, these people, they're basically tax agents that you can walk in off the street and lodge a personal tax return with. You'll pay about $100 to $200 to get this done. One thing, and I think this is financial education for all of you guys as well. And again, I've been through a bit to be able to give this advice. Like, don't always look for the cheapest alternative when it comes to taxes. When you pay accountants less, or a H&R Block, which is basically a firm, when you pay them less, it doesn't always mean that it's saving you money just because you're paying them less. A lot of the time, you're better off getting better accountants that will charge you more, but they will save you a hell of a lot more in your return. So, I mean, for me as an example, I mean, I pay my accountants, it's probably around about 5 to 6K a year. And that will provide them the green light to do quarterly BASes. We're going to get into all this stuff, but for those of you who are a bit more advanced here, like see Michael nodding his head, Matt Dart, obviously, and then DP's not here, but anyway, quarterly BASes, company returns, your tax returns for you and your staff, your employees, covers the whole lot, about 6,000. Now, H&R blocks, you walk in and you can do this for about $100 to $200. So people are like, well, why would I go and spend 6,000 when I can do it for 200? Well, the reason why is because accountants, when you find the right ones, will do things better. H&R blocks and doing it yourself, when you start looking at those numbers, it's literally like, holy crap, get it out, get it out, get it out, get it done, get it away from me. But that is not necessarily the best. If you have better accountants, they'll save you money and make you money. Does that make sense, guys, about doing it yourself, small agencies, and then having an accountant? Yeah. Okay. So with that being said, like, I do recommend for everyone who's pretty much here, all right, you should have an accountant. Hands up in Australia. Tom Rose, I'm looking after you already, I think, with this one. Who needs an accountant? Jack, I'm looking after you. Okay, Tane, Charmaine. Charmaine, I'll set you up with your portal access soon. But if you can just message me, guys, throughout the next 2 to 3 day period, and just say accountant, please. I'm in the middle of speaking with my accountants because there's quite a lot of work on their behalf that will need to be taken on. I mean, show of hands there again, who wants this? So Tom Rose included. So Tom Rose, Jack, Tane, Charmaine, and I think there's a couple of others. Lockie and Zach. Zach, you got an accountant? Thumbs up if you're happy. Yeah. Lockie, you've got one. You have. Okay, so there's 4, but I think there's another 2 or 3. So there's about 7. I'm waiting for the approval from them. All right. And they will take the work on. They just need to obviously make sure they can manage it. So wait for me to get the approval. It doesn't matter if you lodge a few days after, guys. It really doesn't. To be honest with you, I don't lodge until a year after. So this brings me to my next point. I'll hook you up with accountants. If anyone needs a new accountant, you want a better one, and there'll be some stuff we'll talk about in this seminar today that might give you some red flags about your current accountant. All right. And then I can therefore give you a good one. So rolling on from there, basically, what was I going to say? I lost my train of thought. Yeah, I'll get in touch with those guys about the accounting, and then from there, obviously, just get everything lodged. A year behind though, that's what I was going to say. I don't lodge, and you don't need to lodge for up to a year in Australia, right? Up to a year afterwards. Did anyone not know that? Hands up if you didn't know that. Jack, okay, that's cool. Good stuff. Everyone's up and on board. You don't need to rush with this stuff. All right. Side note, ATO, which is the Australian Tax Office, America, you guys over there, and in the UK guys are wired a bit differently to the way that we are over here. The ATO, the tax man, can wait. You pay them last, right? Don't care what anyone says, you pay them last. They will get paid, but you pay them last. That's just my personal perspective. And like I said, this isn't financial advice, right? But personally, they wait. Do not bend yourself over, all right, to pay the tax man. Don't do that. They will wait. You have a year to lodge, so don't stress. We can get it all done. Okay, accountants go hand in hand with bookkeepers. There's one person on this call that I think have a bookkeeping service. Anyone not know what a bookkeeper is? Be honest. Okay, Jack? Does everyone, and Alex? Sweet. Okay.
Sorry, question on the
Go. Yeah.
Just because I know we've been talking about the tax stuff. She wants to look at, the tax lady I've been doing wants to look at my finances every quarter. Is this pretty much like bookkeeping?
Yeah, I'm going to cover all that stuff.
Cool.
Yeah.
Also,
I'm going to cover BASs, so that's basically that will be when you register subtopic. And guys, any questions like that, just come off mute and interrupt me, because I'll just get straight to the point and we'll go over it 2 or 3 times. She wants to look at it quarterly. All right, so guys that are doing things on a bigger scale, you'll be registered for GST. For those of you who are in England watching this recording, the equivalent of that is VAT. I don't know what that is for you guys stateside. Do you have like another tax, which is like a surcharge of about 5 to 10% that gets put on in the US? Do you have that, guys? Or do you just have an overall tax that you pay? Anyone come off mute? Ryan, Kelly, Suzanne, Jono. I don't know whether, I think at your guys' scales anyway, you wouldn't need to worry about it too much. But anyway, GST is quarterly, right? Which is BAS installments. When you hit 75K, which I think is still the bracket, they have changed some brackets around at the moment in terms of tax, which I'll go through soon. 75K enables you to charge GST. You have to do this legally. Does anyone not know what GST is? We should know. I think everyone knows what GST. Okay, Jax. Okay, so GST is a 10% surcharge that you just have to, you can charge, but then you have to pay. So it's an extra 10% tax. However, when you claim or when you charge GST, it enables you to claim it. So if you buy a car for say 50 grand, 10% of that, when you're buying from a dealership, most dealerships will be charging GST because they're making over 75,000 per annum. That car, you'll be able to claim straight away 5,000 of that back. Right? So you're going to charge your clients the 10% because you're making over 75K, of which most of you guys here are doing, which I'm proud to say, making 75K plus. You charge GST, but then you can claim it on your purchases. The same thing, I think, goes for VAT in England. Again, does this spring any brainwaves or anything for you guys, Kelly, Suzanne, and the stage, Jono? Do you have anything like that? I don't know. I don't think you do. I think it's different.
We have our taxes and we do ours quarterly as well.
Okay, but it's just taxes. So you just your personal income tax and a company tax. Yeah. Okay, so there's a thing, and there's sort of like a third tax over here called GST and VAT in England. So yeah, that's additional. But you guys are better. That's fine. So yeah, quarterly. Tay, going back to what you're saying, that's right. Now, piece of advice with that, guys. When you're doing quarterly installments, the benefit of this is that you can actually look at your third quarter and plan and forecast where your fourth quarter is going to end up tax-wise, right? Now, this will be losing a few of you, but don't worry, for Tay, this is for you. So think about it like this. If in your first quarter, you do 50K, right? That's cool. You're going to do your BAS. Your personal income tax is always included in your BAS as well. So that's fine. You look after that, and any wages that you're running for the company, right? And your GST, obviously, the 10%. So basically from there, second quarter, you might do another 55K. That's 105K total. You do another 45K third quarter, you're at 150. What that does is it enables you to go averaging around 50K a quarter. You can forecast to where you're going to end up, and a good accountant will do this with you. So they'll actually do forecasting sessions with you. Matt, are they doing this with you? Are they doing this with you guys at Magnum?
Yeah, I have a monthly catch up with my accountant, and we
yeah, Matt's got a great one. Yeah, you got a great, and he's going good still, bro. Yeah, you're happy, yeah?
Yeah, he's a bit more than your one though.
He is. Matt's got an elite accountant, which you pay him weekly, is it, or monthly?
Yeah, I pay him $200 a week.
So, and that is top end for an accountant. So it's 8-9K a year, but what Matt gets in value of them is crazy. And what he's getting is communication. And it's literally what you won't get from your accountants. Anyway, so you forecast to where you're going to be at the end of the financial year. This will make sense to every one of you when I talk about the brackets, which will come up soon, right? So Tay, if you're forecasted to do 200K, right, your accountant should tell you to have a strategy session at the end of the third quarter, right? Where you sit down and they'll say, right, you will be in a better position tax-wise if you spend $20,000 right now, so that it can reduce your taxable income, right? So then the question is, how do you go spend 20,000? So you're going to acquire an asset, all right, or buy something for the business which is going to be valuable, right? A lot of people would do this by, it's not really an asset, it depreciates, but you buy a car, right? So that's what I do, and I have nice cars because of it. I can't afford these cars personally. I can't. I am broke as an MF. I'm telling you, legitimately. However, my company's rich, and that's the bluntness. The companies I operate have cash flow. I'm going to show you how to use the cash flow to buy the nice things as we continue. But they'll tell you, okay, go buy a nice car or go do something, spend 20 grand. It's not a bad position to be in. You're better off spending 20 than giving that 20 to the tax man, and it'll put you into a lower bracket tax-wise. Does that make sense, guys? Thumbs up. And it doesn't have to make like 100% sense, as long as the concept kind of does, right? Because I know there's some beginners when it comes to financial stuff here, and there's some more advanced people. So hopefully that answers your question, Tay. Yeah. Bookkeepers, we'll go back to bookkeepers. Matt, your guys run bookkeeping services, yeah? Cool. Bookkeepers, guys, they're people that you will need only when you are at a Magnum-esque level, right? Some other people like that I coach in the States and in the UK, they need them. Dan Pardo, you're getting closer, but still not really, bro. Basically, bookkeepers run wages and payroll for your company, right? So this is above most of you that are on ABNs, above you at the moment. What I'm trying to say is this: you do not need a bookkeeper, all right? You do not need one unless you are running payroll. Don't ever get roped in by an accountant saying, do you want bookkeeping services, and I'll do all that for you. It's a waste of money. But when time is money and your time is valuable and you're at those sort of higher levels, I recommend doing it, because the last thing that Matt wants to do is being sat behind a computer paying people, right? Run the payroll, and it's all called single touch payroll through Xero, and that's what you guys are running, I'm guessing, Matt. Yeah. So single touch payroll through Xero. Your accountants can do single touch payroll for you as a one employee if you don't have staff, but that's that. Now, let's have a look at this. Yeah, running on from that, to summarize, basically accountants and bookkeepers. I've had a lot of clients in the past that put a lot of time, and they worry a hell of a lot about tax. Don't worry, like I said before, they come last, okay? And don't be putting time into accounting admin at all. You don't need to be doing anything. Everything will be ran through Xero. So we're going to talk about Xero next. Now, Xero, hands up if you don't know what Xero is. Jack, okay, good. Tay, Tom Rose. Legally, from a legal standpoint, 2020 to 21 financial tax year, so last tax year, the year, what are we completing now? 21, 22, aren't we? Yeah, so this tax year, they made it legal, right? Or it is illegal not to run payroll software, right? Correct? Matt, you'd know obviously that. Michael, I'm guessing you know that as well. You have to use this in Australia, right? You need to use this if you're operating. I'm pretty sure it's company scale, but I don't know if it's ABN scale. Do you know, Matt or Michael, if it's ABN scale, it's mandatory as well?
Yeah, I'm pretty sure it's just company.
Just company. Yeah, they made it mandatory. So the reason why they've done this, right, and it's payroll software. So basically what it does is it hooks up to your bank accounts. Your bank accounts, every time you make a transaction, you go tap your card anywhere or do anything like that, it'll sync into Xero. What you then do is Xero will delegate, and you have to approve these delegations, all right, to put, that's fuel, that's my subscription for ClickFunnels, this is my car repayment, this is my rent at the gym, this is my consulting fees, right? Whatever it is, it delegates it, all right? The reason why they make it mandatory to use payroll software, and I recommend even at an ABN level that you do this, it's $50 a month subscription fee, I think, right? 55 guys that are using it, Michael, Matt, about that, yeah. So the reason why I recommend this even at an ABN level is because it'll keep a log of everything for a fucking year, 10 years, and you can then just catch it up. Even at my scale, I have an accountant, I don't have bookkeepers, right? But I use Xero and I just delegate tasks when I need to catch it up. And then from that, your accountants can lodge your returns. They'll just log in to your Xero. Now, the reason why, getting back to my point, they bring this in, It's so that you cannot manually, right, manually lodge returns using spreadsheets and then what we call hide money in wages, or basically, if you get to the end of the tax year, you know how I was saying before, you do that financial projection for the last quarter. So you've earned 150, you projected to go 200, right? Remember when I said that before? A lot of people before zero, what they were doing is they would say, right, I need to spend 20,000. Most people would do what's called rinse that through in wages. So they'll just go, that's just wages. Instead of paying people X, Y, Z, I'll say that I've paid them more so that therefore it's the easiest way to get rid of the cash. Now with payroll software, you can't do that. Makes sense? Because when you pay people, it's logged. That account or that amount that gets paid into your staff's account or your own account cannot be changed. Does that make sense, guys? So this is why the
Is that the same thing as MyOb?
Yes, correct. MyOb is another version of it.
Yeah.
Right? Yeah, 100%. MyOb is actually older. It's more experienced, but Xero is just taken over them now. But MyOb, go for it. Same thing. And there are other accounting platforms too. And basically, it keeps digital records of every transaction and every transfer. And it means that if you're making 500K, right? 500K, you're projected to do 750. Obviously, the tax implications are going to be a lot more than a few thousand or a couple of tens of thousands of dollars. You're talking 6 figures plus. It enables people to go, all right, I cannot just backdate and say that I've paid people more, right? So the tax authorities love this, all right? But anyway, you've just got to be ahead of the game rather than doing it by spreadsheets and then back logging, which you can't do. Does that make sense? Because it's going to be a lot of conversations today that are quite tough to understand. But cut a long story short, get Xero accounting software, guys. I recommend it, especially at the start of this new financial year that we're going into in Australia. Start using it, and it will log everything. All of you guys now that are on this call, majority are all 6 figures plus, 150 plus, I would say, majority of everyone here on this call. For those of you who are not, right, I still recommend getting it and using it as an accountability tool for you to get to the levels where you can justify not just covering the subscription, because I know myself at $50 a month, it's another subscription cost that you've got to pay on top of Calendly, on top of ClickFunnels, on top of whatever you're doing, right? So I recommend doing it as an accountability tool to get you to take action to be able to afford it comfortably. And that's a little trick that I would give you. And then from there, you're going to think about it. Like when we get the growth that we know we're going to get, or potentially have gotten, we need to recover, for some people here that are on the call, it basically, it keeps you accountable, but you know that in a year's time from now, when you're working with me, you should easily be at another 6 figures higher than where you're currently at. Does anyone believe that they should be progressing every year? I mean, I personally do. Do you know what I mean? I think you should be progressing. So get this stuff now. A lot of accountants, so Tay, we spoke about this morning, they'll keep you and say you're not ready for registering for GST and registering for a company, which we'll talk about soon, because of your past tax returns. I don't look backwards, neither should you guys. You look forwards. Does that make sense? Forecast where your cash flow, like Tom Rose, we'll use you as a prime example. Tom Rose got to 6 figures in 4 weeks or whatever it was recently. We relocated from SA to Melbourne. Amazing. Quick round of applause again. We did this last week, but round of applause. So if you take that level of growth and forecast it to next year, Tom Rose will be doing multiple 6 figures, right? Obviously, we've got to do things differently and we've got to leverage and scale, but projection. Tom Rose's accountant would never recommend her to set up a company and apply for GST right now. I would, right? I would do that because of where we're going and where we know we're going to go. So everyone use Xero and let the accounting software do the work, and then you can do the small admin tasks. Small admin tasks once a month. I do mine, guys, once every 3 months. That's it. I'll sit down and go click across, and it will delegate what I've spent and what it is on, so that it's a it's a write-off. It's a tax write-off. All right, makes sense, guys, about being ahead. Forecast, always forecast forward. All right, and that's where an accountant should be looking forward, Look at your numbers of where you've come up, right? Because they're not going where you've been. They should always progress, all right? Okay, so a little reminder here, and again, feel free, as always, guys, take notes. Send, if you've got an accountant, send reminders to them, all right? Keep on top of them about tasks that they need to be completing for you. I have personally been screwed recently where my BAS statements weren't lodged for 6 quarters in a row. Therefore, I then had to owe a lot of money in BAS, and all that is inactivity from my accountant's end. Accountants need to be kept on their toes unless you've got people like Matt, who Matt's got. And again, just to highlight that, you do not need, guys, everyone on this call does not need what Matt Dart has in terms of accounting. You don't need it, right? And paying what he's paying is something that is justifiable for his company. You do not need that level. You do not need it. So therefore, you have a lower level, which sometimes means a lower level of service. So you've got to keep on top of these accountants. Or it doesn't hurt to send your accountants an email. And this is huge based on my past experience, saying, okay, it's tax time. What do I need to do? What do you need from me? Do that. They need a kick in the ass. A lot of these guys, they know that you rely on them. All right. Even though you can leave your tax a year behind, they still know they'll come to me. And that is a diabolical way to operate. And this is why I can't stand accountants. They have low levels of care for all of you guys. And I mean that honestly. Even my accountants now, I'm very close to them, but communication sometimes is a nightmare. All right. So give them a little nudge. Okay. All right. Now, what we're going to do next is this. I've got about 5 or 6 more points that we're going to talk about, and then we're going to talk more company setup and how to get the most out of your company, how to save the most amount of money, how to live a lavish lifestyle, right, and acquire assets that you do not pay a cent for, your companies do, and your businesses do. So in no particular order, how much tax should you expect to pay, right? I think this is a great question. Now, we'll talk about this one. How shall I do this? It all depends on how much you pay yourself, right? Who here has access to the $1,300 wage week module in the portal? Matt? Tane, you should. Okay, this is huge. This is absolutely huge. When people make more money, their living expenses go up. Who can put their hand up and own to that shit? I can. And if you're not putting your hand up, it's bullshit. So put it up. I'm telling you, if you're telling me that you make more money and you don't spend more, you're lying. And I don't care what anyone says. And Kelly, I'd love to, I can see you smiling there, right? Any nice handbags around there, right? Okay, none of that shit. But anyway, right?
Definitely not. I don't like purses.
Okay, you don't like purses. There you go. All right. Well, you're going to need a big one for when we make all this money for your company, right? So there you go. Basically, guys, it comes down to how much you're paying yourself. This is humongous financial education. It's nothing to do with taxes, really. It's just financial literacy. Get comfortable with the fact, knowing that when you make money, right, we're going to fill your pockets to a certain level. And I'll tell you about the level of that. After that, it's not your pockets that are getting filled. Whose pockets is it? That's a question. Someone tell me apart from Matt. You're not filling your pockets.
The companies?
Company.
That's correct. Get that ingrained into your head. It's a really tough one for people to comprehend. And this is where it's bad. It relates back to how much tax you should be paying. When people make more money, they spend more money. And I've got multiple 6-figure earners, but a multiple amount of 6-figure earners. So people that earn around 2 to 3K a week, right, that have no money. It baffles me how someone can make, as a sole trader, 6 figures, coming from zero, by the way, right? Most people here are coming from well under 1,000. Right? Hands up if you started with me at whatever point of your journey earning less than $1,000 a week. Should be most of you. Do you know what I mean? And it's that simple, right? $1,000 a week. When you earn more money, you're going to spend more money. And for people that make 3,000 a week, so we're talking like 4, 5, 6x. And when they started, they have no money. think about it, when we say it out loud, it's pretty stupid, right? Would you nod and say that that is stupidity? Like, I wouldn't say it's stupidity. It's a lack of financial education. So how much you pay yourself will be dictated by, or how much tax you pay, and it will be dictated by how much you pay yourself. If you've got no money and you're earning $3,000 a week for a complete wage year, you're going to get stung. You're going to get a big tax bill, especially if you're running through ABN. All right. The $1,300 wage week is based on numbers. It's based on statistics, and I'm going to break it down for you now. If you're an ABN holder, when you go over a new tax bracket, right, used to be 90K. Matt, you know they've upped it to 120 now. Michael, did you know they upped it to 120? So they've now upped it to 120, right? So which is great news for everyone. But when you go over $90,000 as an Australian business owner, so you guys in the States, LLC, is that right? That's company, yeah? Before that, though, is like just a sole trader. So you've got 2 levels, is that correct? Yeah. Same thing will be applicable to you. When you go into over $90,000 a year, again, of which most of you guys are making, as an ABN, you pay 40% on the profits, right? When you register a company, you pay 27.5 on the profits. What would you rather pay? 27.5 tax or 40% tax? It's quite obvious, right? Now, if you're earning $3,000 a week for a complete wage year on an ABN, now they have upped the tax brackets recently to 120 from 90. However, right, if you make 150,000, anything over 90,000, so what's the difference? 60K, yeah, just on that 60, you're going to pretty much pay 25 to 30,000 of that away in tax, right? Did anyone not know that? Not know it? Okay, Tay, Shemaine, okay, this is good. All right, this is right. Basically, we set up a company, all right, to get that 27.5%, because then you'll pay a hell of a lot less in tax. But getting back to how much to pay yourself, and hopefully I'm not losing you guys. I'm kind of freestyling this, right? But again, questions, just let me know. The maximum amount that you guys should pay yourself is $90,000 per year, which enables you to be kept under that threshold of a 40% tax bracket. That tax bracket, I think, is accurate for when you are tax file and ABN. I think it's the same. So whether you're in a 9-to-5 job, anyone who's in a 9-to-5 job that earns $250,000 a year, they pay a hell of a lot in tax, and they cannot avoid it. They can't avoid it. We can. So we'll get into that education soon. But basically, we keep you right at the top of that 27.5% tax bracket, of which they've now up to 120K. Because anything over that, guys, you pay 40% tax. So again, don't earn 3K a week and spend loads of it. The $1,300 wage week reflects directly into this. $1,300 a week is the maximum amount of money you can pay yourself, guys, right? After tax, of which when you include the tax on it equals 90K, hence keeping you under the gap from 27 to 40%. Does that make sense? Does it? Or if it doesn't, come off mute now and tell me, and don't be embarrassed, because I'm guaranteeing you right now there'll be at least one person. Do you want me to run through that again, anyone?
Just to clarify, Simon.
Yes, yes.
I think probably people will get confused with this. So if you're paying yourself $1,300, do you just transfer yourself $1,300, or is it $1,300 minus tax?
That's a great question. The tax is held in the company, right? Tax is held in the company. Remember when we all used to be 9-to-5 workers, and when we weren't happy and we weren't fulfilled and we're living the life of our dreams on the seminars of Simon every week, right? Remember when you used to do that, right? Did you ever get paid the tax, or did you ever just get paid net of which you could spend? That will answer the question, right? You always get paid net of what you can spend. The company holds the profits, and therefore the company will pay the director, which all you guys will be directors of your own business, right? That's your title within the business. The company pays the tax bill for that person. Does that make sense? Does that answer it clearly, Matt? You reckon? Yeah. So what I recommend is, we'll funnel through to this as well. Put some money aside, right? Tay, did I bring this up with you this morning?
I actually haven't had a chance to go through those voice
Okay.
messages because I've had back-to-back meetings, but sorry about that.
No, that's fine, no problem. Put money aside, right? So the company, you should always have, right? And when I say company, ABN or a CN, so a company or a business, it doesn't matter, rather, either one of them. When you fill your pockets, you make the company rich, right? When you fill your pockets, and I'm saying the pockets of which you should cap yourself at is $1,300 a week after tax. And for me, I look, guys, I don't want to sound like, I don't know you all in terms of your disposable income status or anything like that. But personally, I don't think anyone should struggle living off a $1,300 tax-free or after-tax wage per week. Can we all agree on that? Is that enough money to live off per week, right? Now, when I say that, bear in mind, right? Bear in mind, that is no phone bill, right? That is no internet bill. It's nothing to do with softwares. It's nothing to do with any overheads because your company pays for all of that. So this is you at the top paying yourself. Now, you can pay yourself less. Like we have, like, Matt, what, if you don't mind, brother, do you want to run past the guys what we've done in the past or what you're currently doing and how much you pay yourself from your company? It's up to you if you don't want to disclose, but it's up to you.
Yeah, that's fine. So I used to pay myself $1,300 a week, but now I only pay myself $750.
There you go. So $750, and I think this is, relatable to a lot of people on here. You can get by, hands up if you could get by on $750 a week, whereas the only bill that comes out of that is your rent and your food. It's $750 and disposable. So how much if you go out at the weekends, right? $750, like I'd be touch and go with that. Like my $1,300 I need for bills, mortgages, stuff like that, right? But $750 really is, it's a good amount of cash. All right, and you can live off that, which means you'd be, if you can live off that, keep the rest of the money in your company, all right? Because everything is tax deductible through the company. Again, for me, stuff like cars, an element of this house, tax deductible. You're going to be careful with that, but an element of this house, everything that I own, all of these, like I have about 5 pairs. Everyone knows how my freaking headphones on Voxer, you hear me go on about it all the time. 5 freaking pairs of headphones. There's drawers full of iPads, this Apple stuff. I don't pay for any of it. The company pays for all of it, right? Moral of the story is pay yourself an amount, whether it's $750 like Matt, which you can comfortably live off, or up to $1,300, all right, which is 90K per annum, all right, 90K per annum. And with the new bracket, it is up to 120, which is even more, which I'd say, what's that going to be? It would be about 1,700 after tax. But I don't think you need that. All right, the good news is for people that do multiple 6 figures, you can now pay yourself 120, still being at 27.5% tax bracket. That's a good thing, right? So for me, I could give myself a pay rise and not go into a new tax bracket, right? That's the good thing. But anyway, pay yourself an amount that you can live off, all right, and leave the rest in the company or in the company or in your business, because 9 times out of 10, your business will pay less tax than what you will. And even if you pay the same amount, so if you're doing that 6-figure bracket, after all your deductions of what you can claim, it'll be the same tax bracket, but all of the stuff that you claim, you won't have to pay for. It'll be write-off, complete write-off for your company. Stuff like the phones, the laptops, the subscriptions, everything. Does that make sense, everyone?
So when you say pay yourself a certain amount, do you mean just put it in a separate account for yourself? Or
Great question, brother. Great question. So every single business, like Tay, you've just set up the accounts for, right? Every single business or company, I personally recommend has a minimum of 3 accounts. I'd write this down, guys, personally. A minimum of 3 accounts. And you have a business transaction account. You then have a business tax holdings, GST holdings, right, of which you can put a percentage of what you earn into all the time, all right, to make sure you've got something for tax time when the tax man comes knocking. And then you've got a business savings account. These 3 are separate to Zach Klomp everyday business or everyday saver personal account, right? What you do every time is I recommend, and this is obviously what we're setting up now, Tay. You've got they've told you to do the business transaction, right? I would do a saver with that. All right. You might even get some interest perks on that account as well, higher interest. And that's where you're going to accumulate your money. You get paid $2,000 a week, 2.5. Pay yourself your 1,300, right? If you want to, or whatever you need. Don't spoil yourself too much. But again, whatever you need. Then the rest of it, I would put personally, this is a number, guys, 17.5 to a maximum of 20% away for tax. Maximum. The reason why it's less is because you're going to have a lot of deductions, which are going to bring your tax right down anyway. You don't need to. The worst thing I see is people putting like 25, 30% away for tax when they're earning like hundreds per week, you know, not hundreds of thousands, like like $900 a week, for example. Don't do that. And then you're going to hold the rest in the savings after you put a bit, so 17.5 to 20% tax, whatever you want to pay yourself, put the rest in the holdings. Transfer yourself from the transaction account into your own name, and that will be recognized in your Xero software as your wage. Charmaine, what do you got? Zach, does that make sense, bro? Yeah, Charmaine, what do you got?
Are there rules around how often you change how much you pay yourself?
No, there aren't at all. So you can, so like for me at the moment, like I'm very good with managing my finances. My wife will happily admit, hopefully if she can hear me, then I might get shouted at, but she's not, right? So like, I could pay myself a lot more. I don't like to. I'm like, even though I should really, because it's the same tax bracket now up to 120. Look, if I wanted to change myself, or however much I pay myself weekly, I could. It gets messier. I just like it 1,300. But again, I'll make a decision now what I'll pay myself from the company going forward into this year, and give myself maybe a pay rise, right, or whatever. But you don't need to. You'll only get judged or taxed on that, what goes from the company's account into your personal accounts as a lump sum. So technically, you can mix and match. Yeah, Tane.
Yeah, so I've been running a profit and loss on Xero at the end of every month, and then just moving 20% of whatever the profit was. Would that be all good as well?
That's the best way to do it.
Yeah, sweet.
That's the best way to do it. So more like, but still to this day, like I hate looking at Xero. It's like, it's boring, really is. No one likes to look at the finances and the legality shit. But for me, I don't even track anymore to the extent of what I used to do with financial trackers and stuff like that. But profits and losses, if you want to stay on top of it monthly, anything like that, do it. I highly recommend doing it. You can do it, but you just don't need to spend a lot of admin time doing it.
Sorry.
Simon, can you explain the 3 ways that you just did it? I was trying to write it.
Yeah, of course. And then Tay, hold that thought, Tay. So you're going to have through the business, and you girls, by the way, we've added 50%. Is that right? To your company, and we haven't started marketing. I think your monthlies have shot up by nearly 2K.
Yeah.
That round of applause, girls. No, we haven't even done anything yet. We haven't even started. And I keep messaging you about that. We're going to start marketing. So get back to me on that. Cal's too busy buying handbags. So with that being said, look,
For me, it's shoes and clothes.
Okay, shoes. Hey, too many Louboutins, right? That's what you're buying all the time. Right? So right here so basically, business transaction account, business saver account, and business tax account.
Right.
And then you've got your personal one separate to that.
Oh, personal separate. Okay.
So this is business registered to the business. Okay. Like
So then pay yourself and put into the personal one.
Yeah, correct. This is the hardest thing for a lot of people to do, guys, right? Remember, your company as an asset will get richer, right? You get paid a wage. But then we're going to talk in a second about what to buy and how you can do things so that you can use a company's money. Is that a hands up, Michael, or are you good?
Yeah, mate, with the business saver account, have you got a percentage that you recommend to put away into that?
Great question. Everything. So pay yourself the wage, right? And then it's up to you if you want to go 20% or 17.5 put into your tax account. And you know that tax is gone, right? And I think that Gary Vee and a couple of other American motivational speakers, they always talk about this. Oh, it's Grant Cardone. He's like, this motherfucker, it's not for me, it's for them. So put it there and fucking forget about it, right? Put that money there and just pay them first, right? Well, don't pay them first, pay them last, but put the money aside for them. And then the rest of it, put enough for bills, leave that ticking. And if, what I would do, if you're like at 6-figure level, let your bills come out. And then you know when that cycle for the week is complete, the rest of it, saver, 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 saver. You guys that are earning 6 figures plus, you should have multiple thousands of dollars sat in a bank account. I'm not saying 10K plus, but you should have savings. Like, and it's that simple. I'm not going to say show of hands who hasn't got savings. I'm not going to do that, but you know who you are if you can manage your money better. And you know now that with the tax brackets, the maximum you should be paying yourself should be 1,300, or they, like I said, they've raised it to 120, but that's only for people that are making multiple sixes. You don't need that wage. You just don't need it.
So I have a quick question.
Yes, Dan.
Sorry.
Yeah.
So I'm registered as a company. This is the first year and I'm doing my financials for this year. I haven't gone through the process of actually setting up the account to pay myself a wage.
Yeah.
But can I still declare that without that transaction happening every week? Can I still do that with this year's financials?
That's a great question, brother. So your accountant will most likely ask, therefore, for your person. So are you just spending money out of your business account each week for you on yourself?
Yeah, pretty much.
Okay, so this is where we got to tighten it, right? So from now, you pay yourself a wage, and you would go into the category of Matt now, where you choose whatever you want, pay yourself that wage, and that the rest of the money, because you're doing good turnover now, you leave it. And what I would do, take it from the transaction account, put it into a business saver. That thing will accumulate money for people on your sort of scale, will accumulate money quick. But look, cut a long story short, it's messier for your accountant, but it's not the end of the world, bro. And again, guys, don't fear the tax man. Don't. Like, they to be quite honest with you, they don't give a shit about people that earn less than $250,000. They don't. It's not worth their time. It really isn't. Like, as long as people pay their way, and like, that's not an insult to anyone, I'm just being honest. Like, it's not worth their time. Like, people that are earning 50 to 100K that sit there worrying about tax time and oh my god, I'm screwed. Trust me, like, and it's in the humblest way possible. You don't earn enough money to make the ATO shit themselves and come after you. You don't. Like, they don't even want to pay the admin on what it costs to have them come after you. So yeah, and your accountants will, the better the accountants, the more they'll save you. All right, and they'll put you delicately poised towards like tap out, which is like, okay, you've earned $250,000, you're trying to claim $150,000 of that as tax write-off. That's an alarm bell to the ATOs, and that's when they'll get notified and be like, okay, investigate, and then you're screwed. So your accountant will know how to put you delicately poised to what they call like the tipping point of how much you can claim and write off. Michael, yeah?
Just on that about being scared of the tax department coming after you.
Yeah.
The accounts that I've got, I pay them an extra $130 a year as insurance. So if I ever do get an audit, I don't have to worry about it. They deal with everything, and I just go talk to them. They've got all the numbers and the figures.
That's huge.
I don't have to worry about it.
That's huge. Honestly,
$130.
Dude, I didn't even know you could do that. All right, I didn't even know you could do that. So I've learned something today too. Do that. Hey,
it might be something that they offer as part of that, because it's under their
so they take
company.
the rap. If you get audited, they take the rap. Is that what you're saying?
No, they don't take the rap, but they deal with the ATO. So I don't have to go, oh, where's all this money gone? What's happened here?
Yeah.
They go, well, here's all the financials. They deal with the ATO, and I don't have to worry about it too much, really.
Yeah, there you go. No, 100%. Because think about it like this, guys, as well. And this is another great point. Your accountants represent you, right? But they will come for you, right? So I had a knock recently on the door, and they were like, you have not paid BAS statements in 1.5 years. And I was like, excuse me? And they were like, here's a bill for 50K. And I'm like, fuck, like this is, I'm like, what are you talking about? And that's like what can happen if you don't stay on top of it. I'm just being transparent, right? But I was like, what do you mean? I rang the accountants. I'm like, where's the last 6 passes for the last year and a half? Oh yeah. What do you mean? Oh yeah, you're fired. See you later. I'm not dealing with that. This is again why you got to stay on top of it. But then your accountants, they only represent you, so they will come directly to you. What Michael's saying is that they'll go to the accountant rather than directly to the individual. Is that what you're saying? And they'll deal with all that themselves.
Yeah, it's just an insurance cover if you get audited, so you covered up to a certain amount.
Yeah.
And it's like when you got a personal liability for your PT business.
There you go. There you go. And I've never had a client that's got audited, guys. Ever. Never, ever. So don't fear. Don't fear. It's only if you're trying to take the piss, or if you've got an accountant that is not being given you the right advice, and you are, they do a dodgy tax return where you're trying to claim 75% of your wages when you're making, again, like 250K plus, which is $5 a week. Like, until you're at that level, I don't know about the other countries, like you guys that are in the States, but I would say you're irrelevant to them unless you're earning nearly, like I'd say $500,000 up to 7 figures. Really, they don't really batter an eyelid too much. As long as you pay your share, they'll look at it, pay 90K personal return, 89K or whatever, right on the brink of that tax bracket. You pay your 20,000, which is roughly what it should cost you guys on a $1,300 wage week. The tax roughly on that is about 20K if you want to make a note of that. But that's, yeah, paying yourself $90,000 wages. It's about 20K, right? That's obviously a little bit less than 27.5%, but you can claim a lot on your personal tax return as well as your company tax return too, right? That's how I got mine down a little bit. But yeah, hopefully that makes sense, everyone. Yeah. So let's have a little look at my last couple of points here. Set up the multiple accounts. Budget income for separate tasks, the online business transaction, the tax account, and the saver account. How much should I put away? So, like Michael asked there, how much should I put away? I put away all of it, and leave your transaction account empty most of the time. All right, after a cycle of payments has completed itself, the rest put it away. Right, you guys, for an example, this is what it should be. You could look at it as like a business rainy day fund, but it's not. It's your business savings. You guys are amazing at paying invoices. This is why I'm not pushed. Whenever my accountants set up the Xero stuff to invoice you through Xero, they'll get to it. Right, I'm happy enough giving you guys a screenshot saying end of the month, last week of the month, as we do, which is this week, by the way. Reminders for invoices. Get it to when you can. I know that you get to it. I know you get to it. You guys go like that. And it's because the people that pay it quicker, they got money sat there. So the people that don't get to their invoices quick, it's probably because they're looking for the paychecks to come, or they're behind, right? And that is exactly what it comes down to. It's just how well you're managing your money. So make sure you put all of it aside. Okay, so tax on that's 20K. The stuff with ABN now and tax file, you got 3 things: tax file, ABN, and ACN. Tax file is what employees have. So as a director of a company, I have a tax file number. ABN, who here operates under an ABN, Australian business number, or the first level in the States, not an LLC. Yeah, should be everyone pretty much. So Rai, Jono, Kel, and Suzanne. You're not LLC, so you should be the first tier, right? What is that called?
So we are LLC.
Oh, you're LLC?
Yeah.
Okay. Jono,
And
right?
the other one's sole proprietor.
Okay, sole proprietor. And is that what you are, right? Yeah, you're sole proprietor. Jono as well. Are you sole?
Oh, okay. So I operate under an LLC since I operate out of a studio, so I wouldn't be completely sure what I'm classified as.
Okay,
other than she's an LLC, the owner.
She's LLC.
Her business.
Yeah, but as you subcontract to her, you'd probably be the sole proprietor, right? So that,
yeah.
It's, again, with you guys, like I said, guys, not legal advice, but just double check with your accountant stateside how that would work, because she's paying you a wage, but you're subcontracting, which means you wouldn't be an employee. You would be like the subcontractor, which is the first one that you guys said. So the next thing I want to get to here is this. When do you go from ABN to a company, right? Now, this has changed due to this tax bracket increase, because I'm pretty sure it would be relevant if they've upped the tax bracket to what, 120. I can only, as an employee of a company, I can only imagine that it's the same for an ABN, right? So when you get to 6 figures, set up a company. That's what I recommend. When you get to 6 figures, set up a company, taking into account the projected growth, right? Like I've said to you before. Does that all make sense, guys? Thumbs up if it does. Projected growth, right? Some accountants will tell you that you're not ready based on what you have done in your past returns. Tay, that's exactly what we were saying. Yeah. Okay. Anyone that has to jump from now, all good, no stress. Any questions? Just bring them up.
Just quickly, because I haven't had a chance to listen to those messages.
Yeah.
Were you advising me to not stay with her?
Uh,
Or are you happy for me to at least wait for a bit, because she thinks that maybe by Christmas that I'll be ready to go into a company?
Correct. So I said to you, like, no, 100%, you can stick with the tax agent. There's only one client I've ever told to get rid of your effing accountant, and he's jumped on the call here. He's the big dude with the fucking tattoo in the bottom corner. So I told him, and we saved you quite a bit of money, Phil, at the end, did we? Yeah,
you saved me about 15, 20K.
Yeah, there you go.
Yeah.
Just like that. And that's why we set the companies up, right? So any accountant, oh God, my God, you could tell I bleed inside when I speak about this. I could have had another car on the freaking driveway if I didn't have to go through this one. But anyway, it is what it is, guys. Like, look, anyone who tells you not to set a company up based on where you have been compared to where you are going, it's a motivational finish line here. We are going forward, people, always. Projected income is where you've got to look. There's no detriment. You can set a company up. I think I was telling you, Tay, in the messages you'll get to. No detriment to setting up a company now at 20K. You do that. We've done that with one of my other companies, the Barman. We set it up. I don't need to yet, but we set it up, right? No detriment. But when you're making up to this 120 tax bracket now, the new tax bracket, which used to be the 90, I think for ABNs, actually, it might have been 80K. Was Matt, was it 80K tax bracket for ABNs where it went up to 40%?
Not 100% sure.
I think it was 80, but anyway, so basically, guys, when you hit 100K, I recommend setting up a company, and if you can time it in with the end of the financial year, great, amazing, awesome, do it, and you're going to save on your taxes going forward when you go over that amount. All right, that's when I recommend to do it, when you hit 6 figures. But the reason why people might tell you away from that, Tay, is if it's the same tax up until 120, even if you earn 150, and this is what I said in your voice messages, after you claim all of your stuff that you're going to claim, it's going to put you into a lower bracket anyway, where you're not going to get the benefit of the company tax bracket, right? Does that make sense, guys? So if you make, say, 150K and the tax bracket where it goes from 27 to 40 is at 120K, if you're going to claim 50 grand's worth of stuff, then you're only going to be taxed on 80K, right? Or 100K, or you'll be making a 150. So yeah, you claim 50 grand. You're going to be taxed on 100K, which is under the 120 bracket then anyway. So it doesn't matter. Whereas before, I think it was 80, or even if it was 90, and you make 150 and you claim 50K, right? You still, that 10K over the bracket will be taxed at 40%. This is where the timing of a company is useful, because you'll be taxed at 40% on the margin that's over that bracket. Does it make sense, guys? Yeah, like basically just get it done at 6 figures. I've never been wrong with it. Like, yeah, and Phil.
I think she was just worried because she was like, it's going to cost you like 2 grand to register it.
Anyone that tells you it costs 2 grand, they're ripping you off. This is another pet hate of mine. No, it does not. It costs them about 1,000. So if she wants to make a quick buck, she's charging you $1,000 overhead. It's
Okay.
bullshit. I'm sick of it. These accountants, honestly, and you can tell again my frustration coming out. It's wrong.
She's
It
old.
was 1,600 to do mine. That was a couple of years ago. 1,600 a couple of years ago.
Yeah, look, it should cost you. I've never paid more than $1,200 for a setup of a company. Never. So if it's 12, 15, 16, 2,000, all of that profit margin is going to them. Nobody else. It's going to them. She's charging you an arm and a leg. That's all it is. So be wary. I would never pay. And this is for the people in Australia, by the way. I'm not too sure what it costs in the UK for those watching the recording, or the people in the US. But watch out for these people, man. I'm telling you, like, it's just that alone just aggravates me. It's $800 that's in your pocket, right? That right there is half of a Unipro subscription gone straight to them. Do you know what I mean? It's not cool. Really isn't cool. Last thing I want to leave you guys with, because we've just hit the hour mark, is this: the best time to price rise your services is right now. All right. Who is looking at doing price rising? Anyone looking at doing price rising? Okay. If anyone watching the recording of this or live wants the template for price rising your services, message me price rise template on, I'll tell you what, can I make it easy? How do I do this? I'll give it to you guys on here. I'll put it in the chat for you. Bear with me 2 seconds. It's a video, all right? This is modeled off what I did with Phil Perg and hybrid with Matt Dart. I don't know whether Matt's still here. Is he here? No, he's not. The acceptance rate of this email that goes out is 99%. I never had one objection. Phil never had one objection. I think Matt had one client that objected to the price rise using this tailored email. So what I recommend is use this email. I'm going to get it up for you here. Guys, questions while I do this before we start to kind of wrap things up. Again, for people watching the recording, hopefully it's made sense. Taxes are a complicated topic. I kind of, like, as you know, I kind of go off on tangents, but hopefully everyone here so far, thumbs up. Is it made sense? Like, has anyone got value from today? Like, especially with how much to pay yourself, the different accounts that you need to have set up, save your cash, like be financially secure, right? That's what I recommend. Price rise, let's have a look.
I did have a question earlier. Did you think I was ready to invest in Zero yet?
Yeah, 100%. You need to.
Okay.
Like I've said before, by the way, guys, there's a link to the YouTube training video of how to correctly rise your prices in the chat on this Zoom. Anyone who's watching the recording, just ask me for the link. Every single person is ready for Zero. It's far easier than using an Excel spreadsheet. The only difference is, depending at your level of business, is whether or not you want to pay $50 a month for the subscription. But when you go company setup, of which Tay, I do think we are ready for. Tane, we're pretty much ready, bro, for that shit as well. Like, you need Zero. And I'm pretty sure there'll be regulations around this in the States as well, about people that you need to use. Do you have to use accounting software, guys, in the States? Kel, Jono, Suzanne?
Not that I'm aware of.
You don't have to? Okay, so
There's no regulation where we have to use Zero or anything like that I've seen or heard.
All right, well, that's good. I mean, yeah, Tana?
Yeah, I do have one question. So when you, like, are starting to look at different sources of income between, like, the PT sessions, supplements, and online training, do you keep them separate or under one umbrella, like the different sources of income? Like, how do you sort that out?
All under the one, bro.
All under the one. Okay.
For you, just all under the one. So if you're a PT and you're like Charmaine, yourself, Tom Rose, again, I'd say Tay, bit of Tay in there as well. Probably the guys in the States, definitely. Don't know about Aaron, not too sure about you, bro. But anyway, if you got like online PT and face-to-face, yeah. So you guys have got a bit of both. It's all under the one umbrella. With your supplements, Tane, as well, same thing, under the one umbrella. And look, when you set up companies, side note as well, you're going to set that up with a trust. Yeah. This is a whole different conversation for another day, but a trust protects your assets. If anyone wants to come and sue you, they can't touch shit, right? So you need to have a trust set up. And I'm pretty sure it'd be the same in the States. You have trusts over there? Yeah. So have a trust set up where basically you are a beneficiary to the trust, which owns the company and protects your assets. So what you do is if you buy, like with myself, you have investment properties, you buy those in the trust's name, of which you are direct beneficiary of. So if someone comes and sues Pinnacle Fitness Consulting for only making them 6-figure growth and not 610,000 a year or something like that, then basically they can come for me, right? If the house is in my name, then they could take the house, right? So put it in trusts if you've got property. That's one for you, Charmaine, as well, future and stuff like that. Aaron, what do you got, brother?
Yeah, man. Just quietly, how much does it cost to actually set up a trust? I actually don't know.
Part and parcel of the ACN, the company setup. So you should be able, when you set up a company, I don't know, don't quote me on it. It might have to be done at the same time of when you set the company up, that you set a trust up within it. Speak to your accountant on that. Right? Yeah, because it's benefit to everyone to have trusts set up with a company. And then so when you want to go and if you want to get onto, the main thing is property ladder, right? So when you get onto the property ladder, because everyone in life, I mean, natural progression is to buy a property and settle down and whatever. Basically, yeah, I would say make sure that you can set one up now, even though you set the company up a while ago. Yeah. But that setting up that company for you, bro, is godsend when you did it, because like you're covered now. You're covered. You can't get taxed more than 27.5, of which, guys, that 27.5, that's up to like 5 to 10 mil, right? And I don't coach anyone at that level. So yeah, you'll be covered well and truly for a long period of time, which is good. Anything else in this chat? So yeah, same as my yes, it is just before. They're all good.
Simon, I have a question. Can we stay on for a few minutes after I have a
couple? Of course we can, no problem.
Okay, thanks.
Anybody else? Because I'm really glad here, the guys I've got here, like it's like core people here that I knew would be wanting this tax stuff. Is there any questions whatsoever that you've got? Otherwise, I'll give you a quick summary rundown of what I would do in a minute. Any questions? You were on the brink, Tay?
Yeah, I'm just messaging one of my old clients from F45 owns a tax agency. So I'm just emailing him basically everything that my tax lady has said and whatnot, because I guess now if you advising me to still go to a company, should I still do that within the next 2 days kind of thing?
No. So this is the thing, Tay, like I said before, and between me and you, we know how you operate, right? So don't worry, like you've got time, honestly. And I say this to everyone, like don't stress about this shit.
Yeah.
And if you set up a company at like the end of the first quarter of a financial year, it doesn't matter. Like the beneficial timing is now. But when you listen to the Voxes, Tay, I've said you don't need to go to a new accountant. She's really looking after you, and it's really great. She's obviously helped you with some marketing advice and stuff like that. Yeah. But I would I say in the Voxer, the only thing I would look at is like, look, forecast. Don't look at past, right? Forecast. Right, that's the biggest trait of account. Oh, you're not ready for that. It's nothing to lose. What happens if I go and sign up 50 clients tomorrow and I start making double what I'm making now? Oh yeah, good point. That's the way that people should think. You've got to forecast, not look past. So there's that. Yeah, Charmaine.
When you're charging your clients, when you're a company,
Yeah.
Do you put in the price point, the GST, or do you say plus GST?
Great question. Tane, we had this discussion ages ago, I think, didn't we? About
sorry, my computer dropped out then for like a good 30 seconds.
Oh, okay. So can you repeat the question, Charmaine? Is that all right?
So when you're a company, when you're charging out your clients, do you put in the price point, the GST included, or do you add the GST? So when you're charging them, go, oh, it's $90 plus GST.
Tane called me up on
Registered.
I think legally now we have to show them the price with GST included.
that's apparently
It's only like, I think it's only like business to business transactions you can go plus GST. But if it's like to a consumer like us going to clients, I'm pretty sure we're gonna have GST included.
So I just put your prices, if they're 60 for a half an hour, put them to 66.
Yep.
Right. My tangible products will currently say plus GST in them because they're old. I have a monumental task of, and I've said this a million times to people, but it is monumental. It's going to take me 6 months to rebrand the whole company once we get everything finalized. That's the content. We'll be getting a whole facelift. So yeah. In summary, if that's any more questions.
I did have a questions back to the 3 business banking accounts.
Yes, go for it. Yeah.
That first account is what you want your like PaySmart or any other kind of, I know if I use Trainerize and I want people to purchase, like for the students to purchase programs from that, I think I have to set up like a Stripe account. Obviously I'd have to link that into that. And then that's the account that all the transactions and direct debits, say to the gym, comes out of all that account.
Yeah, that's correct. So all the money you make goes through a business transaction account. From there, if you're making 3K a week, right, I would pay yourself your 1,300. That'll leave you with 1,700. What I would do then is leave enough there for your phone bills and whatever. I always leave a few $100, even again, like at my level. I sound not being egotistical, but with the level that I'm at, I still only leave $300-400 in my account, guys. Like, because you know what frauds and scammers are like these days. This shit is running rife at the moment. It's fucking crazy. So leave $300-400 in there. That covers direct debits. The rest of it into a saver, and I just put all of it in the saver. I don't even have the tax account anymore. It just complicates. But it's a lot of people visually, and I used to be like this. You'd rather have like 20K, which you can see, and it's like, okay, goodbye, like I'm gonna wave goodbye to it, but rather than having like 220K, where of which you're like, you know, you're gonna have to give some of that away. Like some people mentally would just look at it, they look at it differently. But yeah, that hopefully answers your question. Everything is a business transaction, and then you pay yourself into a personal.
I'm going to send you through my script now that I'm sending out to my clients tonight.
That's cool. That's cool. Get the advice from that accountant you're messaging, and then we'll go. Anyone that needs an accountant, let me know. But this is what I would do, guys, right? Get yourself to 6 figures, right? When you're at 6 figures, get yourself a company registration. As soon as you hit 75K, you're going to register for GST, right? You could, if you wanted to, register a company and GST at the same time, because you've got to go through your accountant to do it. So just tell your accountant, I want a company set up for the way that I'm trajectory, the way I'm pointing, forecasting, not looking at the past. Trajectory is going this way. Can you set me up a company plus GST registration, please? And then when you do that, you're going to make, you know, again, you hit your 6 figures. After your bills, all right, and after you pay yourself, whether you pay yourself a $750 amount like Matt Dart, or whether it's a $1,300 amount like me, one thing you do is you pay yourself an amount. Pay yourself an amount. And let me say it again, pay yourself an amount, and make sure that it's the same until you can afford to give yourself a pay rise. The rest goes into a holding account. Do not have disposable income from a business account. Your business can cover, and I never actually got to speak about the lifestyle and how to live lavishly. Your business can cover anything from, but it's not limited to, cars, meals, clothing. PT industry is really lucrative to be able to claim clothes, right? I wouldn't go as far as Kelly's handbags, but anyway, clothes, right? This is that simple. Shoes, probably if you're buying Christian Louboutins, you're not gonna be able to claim that, right? But anyway, you get what I'm saying. Clothes you can claim, flights, hotels, trips, Ubers, anything and everything you want, you put through your company. And like for me, when I travel internationally, I will only travel business class because my company, if rather than giving the money to the ATO, spend it. It is better written off, because I cannot afford business class, guys. I can't afford it. My company can afford it, right? So, and that's the one thing. A lot of people associate people associate people with like the facade. Like I'd never post stuff on social media about my personal life. I don't. I think it's quite egotistical. I think that's the way that online is these days. I don't need to do that. I don't like doing that. Most people are posting shit they can't afford, right? But also people presume, and they get envious and jealous of people thinking that these people are affording these things when realistically they're not. They own companies that can pay for all of it. Hence why they have a term called business class on an airplane, right? It's for businesses. That's what, right? It's not for, or it's for wealthy individuals, of which I'm not one. Not as wealthy as I would like to be anyway. We always want to progress, but you know what I'm saying? It's the companies. So make the company rich, spend the company's money. Just ask yourself the question, could I be training a person at 9 o'clock at night when I'm going to go for a meal instead with my partner? And do I need to transport there? Could my car have broken down where I need to get an Uber or even a fucking helicopter? Who knows, right? Yes, I could. That's how you spend the company's money. If it's justifiable, it's doable. There are brackets and you can't go too much. When you're buying cars, you can't buy anything over 60K, right? That's another thing. But that might have changed. But you know what I'm saying, guys. Let your company get rich, and then the 1,300 that you pay yourself, it's a lot of money, guys. And all I want to see is you guys help people change lives, but we are here to benefit you all. And that is financially, right? We want to benefit you all financially. So get the 6 figures and then do all your delegations. And it is that simple. Delegate it out and then let the company pay for everything. But don't fly in helicopters and don't buy too many Christian Louboutin pairs of shoes. Cool. Any other questions, guys? Are we good to wrap it?
So can I just ask one question?
Of course you can.
It's kind of going back, but to the accounts, because I drive so far to work. I'm driving nearly 200 Ks a day sometimes.
Wow.
If I'm going to be setting up multiple accounts, do you set it up as like an actual business bank account? And do I use like, I don't know, the card to pay for my fuel? Does that make sense? Rather than my personal?
100%. So there is 2 different things. Who do you bank with?
NAB.
Okay, you're with NAB. If you're with Commonwealth, see that at the top there's 2 colors of cards, the gray and the white, right? The gray's are company ones, the white's the personal. So set the company cards up. And I don't have cards, right? Everything is tap on my phone these days.
Yeah.
But you pay that directly from the business account. Great question. And when you're doing that amount with these fuel prices, it's going to hurt a little bit.
Yeah, I spend a lot.
Yeah, and like for me yesterday, I did it and it was like $100 for half a tank. Like it was screwed, right? But anyway, you pay that from the business account. I don't, it's business account because it's commuting. Same thing with, okay, if you go like PTV, which is like train line in Victoria, right? Public transport Victoria, or anywhere where you guys are, anywhere in the world, train fares, Ubers, the whole lot, airplanes, helicopters, whatever. It's all company write-off. And this is how these companies are living so lavishly. It's not the actual individuals that are rich, guys, and it's not. And this is where, when you become educated financially at a bigger scale, you start to see. It's these companies that have yachts, they have parties on boats. It's all tax write-off. It's write-off. And that is how these people are doing it. It's not individuals. I can guarantee you most millionaires, like technically, I'm a millionaire with my house, my portfolio of houses, multi-millionaire. I don't have $1 million cash in my bank account. A lot of people get that twisted. They think that millionaire is like cash. Most millionaires won't have a millionaire status in their bank account because they use their money to buy assets. And that's a whole different sort of game of financial education. And yeah, if that makes sense, you know, assets, acquire assets. I'm diverting off another topic now. We'll leave it there. Any other questions? But guys, Kelly and Suzanne will hang around. Anything else? Good. Seb, thanks for tuning in, bro. Thanks for tuning in, brother. It's been great to see you there in the background, dude.
I could throw a spanner into work and we could talk about dividends and shares and stuff like that.
Yeah, well,
from business.
Dividends and shares. So company registration is required for the shares. Dividends is bonuses. I would only worry about that when, again, you're making probably multiple sixes, 200K plus. I've never taken a dividend from my company.
Yeah, one thing my accountant was saying with that, instead of taking the dividends, you can actually pay yourself extra wage and just get taxed, and just goes into your personal instead.
Yeah,
it's easy to do.
Yeah, 100%. So it's easy to do, and you'll only, because the company pays tax. So the company will pay the 27.5% on whatever's in the account. If you're in a tax bracket where, again, we want to try and keep it below 120 now, the new bracket, which is also 27.5, it will technically be tax free because the tax has been paid on it already. So I could pay myself now, because it's 90, I pay myself 90. I could pay myself a $30,000, theoretically speaking, off my top of my head, not being an accountant, $30,000 bonus, tax-free. That's cool. Maybe I should do that. Maybe that would make my day.
Why not?
I'd need 30,000 first though, but anyway. Yeah, that's a good point. And then shares and all that sort of stuff. Yeah, that's where you can get investors to come into your company, and different story, different scale.
Yeah, so like my wife's a shareholder in the company, and she could technically get paid a wage or a dividend from whatever profits left over.
Yeah, that's a great point. You know, you can actually dodge a lot of tax by paying yourself a wage up front as well as a dividend, as a company beneficiary. This is where it gets twisted now, guys. But if you can afford to pay yourself 90K up front, if you do that, I think tax-wise, it benefits you to do that, opposed to paying yourself a wage weekly or monthly. Have a look into that one, mate. I don't know whether you knew that, but I think there's tax loopholes for that. Yeah,
I'd love that.
Yeah, but again, we need the cash flow first. Do you know what I mean? You gotta have the cash flow to be able to pay yourself up front. But this is where it gets next level, guys. You know, and I really can't wait to see you all grow. And like, I'd love to sit here. I'm always an open book, you know me, and I'd love to be able to sit here and just talk finances with everyone, because it's all about like financial literacy and education, which will get you to become wealthy eventually. And it's not about just earning and saving. It's not. It's about investing, acquiring assets which work for you. You don't work for money. You have money work for you, and that is how you probably wrap it. Right there. Suzanne and Kelly will hang around. Anyone else? We good though? Tane? Nah, you good? All right, guys. I'll speak to you on Voxer and Cal and everyone else.
Cheers.
All right. No worries, guys. How's everything in sunny Mexico, guys? Or New Mexico?
Beautiful. It's good.